Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Wednesday, the 7th of January, 2015. Here's a look at the ES S&P E-mini front-month futures contract daily chart. You can see that we've rolled over quite a bit here to start the year. There's an old rule we used to go by. And this is interesting. We bring this up right now because we're 3 days into the year. The rule is if the first 3 days of January go in one direction pretty steadily, and I think we could argue at this point that they've been down, the rest of the month is usually positive. Now, we'll see if that rule holds. Some years you don't get a steady move in either direction, so it doesn't matter. But over the years I've been trading, I have found that to be a fairly significant rule. So we'll see if the 3-day start of January rule applies, which would mean maybe we start to head up from here. But certainly there's no sign of a turn yet. We don't just jump in and buy because of that. It's just an interesting side rule because it does work many years that it plays out. Here's a look at the S&P lost 18 again on Tuesday. Here's a look at the Nasdaq 100 index, which lost another 50 points. It's down 203 or 4 days basically since the day before New Year's Eve, and puts it right at that last support level, the low of December. So obviously I pointed out the other day, this is a key support level because this was the highs of September in October, and then it broke out above that, gapped up in November and ran, found support here in December. So this is a critical area. We break this by much. Remember, we had a lot of gaps in October that never filled. It'll be interesting to see if we go back and fill those gaps all the way near 3,700. The stocks lost 15 for the session, also near a key support level, but you'll notice the red static trend line that could be the target there. Here's the biotech index. Hard to read much off of that. I think the big thing that's got the market stumped right now, beyond the fact that we're in the new year, beyond the fact that we've got a new Congress being sworn in and the uncertainty that will come with that for sure, is the crude oil futures closing near $48 a barrel on Tuesday. Not a lot of people would have predicted that just a few short months ago. Literally in August, we were talking about, we were talking about the fact back in the summer that the prices weren't rising in July. That's the most common month for them to rise. And that was interesting, even though it was kind of a hot month in a lot of parts of the world. But we didn't really have any major hurricanes this year, I would say. And then once you got past that, things have just been on a decline. So that's interesting. Definitely having a role in the overall market. We just can't tell yet what the final impact will be. Here's a look at in 5-minute bars the S&P the last 2 days. You'll notice the 13 Comer buy signal near the lows. Again today, we got the 13 buy signal around noon Eastern time. We retested the risk line of that and did not break it. Came back up to the midpoint VWAP. So the Comer doing what it's supposed to do. Here's the Nasdaq futures for the session. Again, open flat. The first hour and a half, you really would have thought this was going to be a complete junk day. And then we really broke down after that, which is late. Volume held up later than that. We did go through the votes in Congress to get the speaker established. Maybe that played a little role in it. But the 13 signal here, also the low on the Nasdaq side. We sold off after that. We got some nice winners, including a big winner in LinkedIn for the session, and so no complaints there. All right, so what are we looking at here going forward? Well, tomorrow is Wednesday. We've got the trade balance number, among other pieces of data, due out. We've got trade balance. We've got the MBA mortgage index, ADP employment change, crude oil inventories, and the minutes of the last Fed meeting come out at 2 p.m. There's still other data coming out this week, including the non-farm payroll data that comes out with unemployment on Friday. But Wednesday's got enough here. We could get some action early because of a reaction to that news, and we'll be looking for that. We've also had enough movement in the last couple of days, I think, to create sort of a little more energy in the market. We like to see things slowly come back as we start the new year, and we're definitely doing that. So I'm going to end by talking about volume. Here it is. Here's the volume on the daily chart. We almost got to 2 billion shares on the Nasdaq on Tuesday, and that was despite the fact that volume looked weaker in the first 30 to 60 minutes and ended up climbing steadily throughout the course of the day and doing fine. So volume is back. We wanted to get back near at least above the 1.8 and close to the 2 billion shares or better like we did last year, and we're there. So we'll see if that holds up, and that'll certainly be a key to successful trading. Hope you have a great trading day. We'll be in the room calling it as usual. Charts brought to you by eSignal. Have a great session.